of all, once again, welcome to the very first New York Space Business Roundtable of the year. We are thrilled to have an exciting program launching a new series called Deal Flow. And we will be getting started in just 1 minute. I want to give you a quick orientation, which is that the ability to mute and unmute is disabled for the time being. However, the chat button is open. And so you have the ability to put any comments, thoughts, questions in the chats. And we welcome your thoughts and questions. We have two exciting panelists here that will be introduced, Peter B. DeSelding and Will Porteous, as well as the esteemed Jason Rainbow, who's been with the roundtable since its beginning, who will provide an update from Space News. And so we welcome your questions for them. And of course, as per always, we will have our big question at the end, at which point we will give you the opportunity to ask questions directly and mute and unmute. In the meantime, the chats are open, and I'm going to hand this off to Mr. Lou Zaccarella.
Well, thank you, Tamara. And Happy New Year, everyone. Happy 2023. The New York Space Business Roundtable is kicking off a 3-part series on deal flow in commercial space for this quarter. And so we thought we would bring in two legends to talk about what they see as happening in the time ahead. The commercial space and satellite industry has been doing deals with global brands for years. Recently, the pace has quickened as high-profile satellite industry sales have made some news. So one might assume that this is going to increase the value of industry companies and startups and generate visibility that will drive more deals and funding. And I'm talking about marquee brands like Apple and T-Mobile and Sichuan Airlines. We're choosing companies in our industry, Globalstar, Starlink, and Viasat for a range of services that only satellites we think can provide. So what is the rationale and the anatomy of these deals? And again, what will be the overall impact on the industry, and what's going on? Is something different now percolating in the investment climate? So we're going to look at that today, and we're going to see how maybe more and more companies can continue to benefit from the activities that are taking place. But again, we're going to look at this realistically. That's why we've invited the people that we have. So I want to kick that off and then end by asking the question, what will be the 3 biggest deals in 2023 for the industry? So there's actually a lot to cover. It's wide ground. We encourage you to ask as many questions as you'd like. But we're going to try to put all of this within the context of the macro economy, things that have been taking place and things that will take place. So we're really excited about this conversation that is going to kick off the year and hopefully trigger a lot of thoughts in your minds. But before we do that, I want to shout out some of the people who make this roundtable possible. And there they are. We've got Space News, who is our media sponsor, the Grand Duchy of Luxembourg, who is bringing this entire series this year to us, as is World Teleport Association, the only trade association for operating teleports and their ground segment partners throughout the world. And we thank them again for their support. Let me talk a little bit about some things that are taking place in our universe. Ori, next slide.
The Earth is embraced by its oceans and seas, and so are we. We depend on them for more than half of the oxygen we breathe. Scientists estimate that waves washing up on America's coastline contain enough energy to meet the power needs of 2/3 of its homes and businesses. The world needs that power, but capturing it from the sea is hard. Salt water corrodes metal, The up and down, back and forth motion of waves breaks moving parts, and stormy seas can wreck any but the strongest structures. To speed progress, Oregon State University used funding from the U.S. Energy Department to build 2 unique testing platforms for wave and tidal energy systems called PacWave. They provide test beds connected by undersea cables to the onshore electrical grid. Dozens of undersea energy converters can be tested at the same time. It is the world's first low-cost, high-performance facility for testing ocean energy. But to test systems, you need to know what the ocean is up to hour by hour, the temperatures, winds, wave patterns, tidal flows, and ocean currents. By matching that information to the test data, engineers gain invaluable data on each system being tested. The vital data for PacWave comes from the sea by way of the sky. The university has placed buoys across the region where its platforms operate. Each is equipped with temperature, motion, and other sensors. They are also equipped with Globalstar Smart One solar devices, small, rugged satellite transmitters that are charged by sunlight and can operate for up to 10 years. Using an online system called Spot by Globalstar, PacWave researchers can find the location of each buoy, import data, and receive alerts if buoys drift away. Off the Oregon coast, the waves roll in and the tides rise and fall. The stream of data, beamed up to Globalstar satellites and back to Earth, is helping innovators test their ideas faster than ever before to learn what fails and why, and what might work tomorrow. Space and satellite, the world's invisible, indispensable technologies. Brought to you by Space and Satellite Professionals International with the support of Globalstar.
Additional support provided by AVL Technologies.
Very good. And I actually made a mistake. It's early in the year. Give me a break on that. But that was a video from the Better Satellite World video series. And we just wanted to give you a taste of what satellites are capable of. And of course, how what we talk about today is ultimately leading to something that one of our guests likes to comment about, which is that we contribute our engineering and our skills to making the world better for every human being every minute of the day. And that's something that we're very insistent on at SSPI to continue to tell those stories. So we hope you go to bettersatelliteworld.com and look for more of those videos and stories and conversations like the one we're going to have today. And Ori, I promise I'll attend the rehearsal next time on that. Deal flow in commercial space is what we're talking about today. And again, there's been a lot going on. What we'd like to do to start our show is to welcome our guests from Space News, our media sponsor, to talk a little bit about some significant digits in the industry, some trends and some flows. And the timing is good here because Jason Rainbow, who you all know, has recently come out with an article in this month's issue. Before I go to him, however, I want to make sure that you understand that as you're listening to this and you're hearing folks, you know what the big question is today. So we're going to have that at the end. So, Ori, why don't we put the big question up? And we're going to ask, in your minds, what do you think the 3 biggest deals or deal trends will be for the industry this year? And so we'll get to that at the end. But I want you all thinking about that now as we hear from Jason and our guests. So, Jason Rainbow, welcome to 2023.
Hello again. Thanks for inviting me back on.
It's great to see you. You know, I mentioned that you have a piece out in this month's Space News on this topic. And what, we wanted to hear from you is, what are you seeing so far in terms of deal flow? What are some of the factors that are impacting it? And, picking up from some of your reporting, where do you think we're headed and what do we need to know?
Yeah, thank you for calling that out. It's obviously a big topic. I encourage everyone to seek out that article, and the one that my colleague Deborah did also in the same edition, where she looked into what young space companies are doing, kind of innovative practices they're employing to kind of buckle down during this period of uncertainty the economy is going through. It's certainly an interesting time for the space industry right now. There's no lack of doom and gloom out there for the macro economy, and yet we're still seeing significant fundraising deals for early stage space companies, despite this rocky climate. A few weeks ago, I wrote about a Canadian company called Northstar Earth and Space, which managed to raise $35 million in a funding round led by a private equity firm in the US to deploy a constellation of space situational awareness satellites. So that's obviously a new market they're pioneering. And so it shows how there's still appetite out there for the right kind of risk, even as investors become increasingly conservative. And there have been plenty of other recent fundraising announcements. Capella Space is another one. They raised $60 million to accelerate the deployment of their synthetic aperture radar constellation. So I'm very keen to learn more from your guest today on what the sentiment is from investors in the space industry right now. Is it a sign of how sophisticated these investors are getting and how much they understand how it can take companies in this market to start generating revenues? Many space companies are, after all, chasing really big potential markets if they can realize them. That doesn't seem to be the case for the young space companies that went public via a SPAC. However, they have been heavily underperforming with public investors, and it will be interesting to see whether that leads to deal making this year with their valuations trading so low. But I think it was interesting to see Worldview announce plans. This didn't make it in the article I wrote, but they recently announced plans for a SPAC this month. Worldview, they're somewhat on the fringes of the space industry. They're developing a stratospheric balloon platforms as an alternative to spacecraft for research and tourism. But it's notable that there's still some steam left in the SPAC machine, regardless of the challenging economy and stricter regulatory environment for them. In stark contrast to the share prices of young space companies that went public via a SPAC, traditional space firms, as part of the aerospace and defense sector, outperformed the broader stock market in 2022. That's partly a result of strong government backing that these companies tend to have, which makes them more resilient than space businesses that are purely commercial. I spoke to analysts at Euroconsult for my feature about this the other day, and it's interesting how theoretically, when the global economy is going under uncertain times, governments tend to allocate their resources to their core functions, which sometimes leads to budget cuts or delays for many projects. However, when it comes to the global government funding within the space sector, they say it actually grew 8% between 2020 and 2021. And that could have been even higher if it wasn't for COVID-19. So despite economic conditions that might slow the industry's growth this year, Euroconsult still expects the global space economy to grow nearly 75% by 2030 to reach $642 billion. Also of note is a 300 million euro loan from the European Investment Bank provided earlier this month to SES, which is a large established satellite operator. So there seems to be plenty of institutional capital focused on the space industry right now, and deal making is already in full swing. We saw two sizable acquisitions announced right at the end of last year. Maxar Technologies agreed to be sold to private equity in a $6.4 billion deal, and Aerojet Rocketdyne agreed to be sold to L3Harris for $4.7 billion. Analysts are expecting more M&A this year, not least because of challenging financial conditions, as the headwinds that weighed on growth last year continue into this year. You have the pandemic that's continuing to linger on, clogging up supply chains and disrupting projects, and the war in Ukraine, which is a double-edged sword for the space economy. It's a boost for Earth observation companies, for instance, but has also affected energy prices, satellite launches, and so on. And although there are signs of growth, for instance, in the US, where employment figures there recently were shown to be higher than expected, inflation is still very high and consumer confidence very low. There's a lot of talk still how interest rate hikes aiming to keep inflation in check could push the US and economies around the world into recession. But even if a recession is avoided, we're still looking at a constrained economic environment this year. That said, although gloomy economic forecasts spell trouble for some early stage space firms in 2023, the industry as a whole should largely prove resilient to any downturn. At least that's what I'm getting from analysts. So a complicated and ever evolving picture for 2023 as ever, but there you have it, Lou.
Thanks, Jason. That's quite thorough. I appreciate that. Just a couple of questions. I mean, will the areas of resilience be specific now? I mean, I think the industry is big enough to be talking about sector specifics. I mean, is there any data that you have where you can say, broadband will grow or will slow down, or areas where we've got government involvement will be more resilient?
Yeah, absolutely. So companies with a strong long-term government pipeline, big government pipeline projects coming in on the way, they are more resilient than, like I said, those that are purely after the commercial markets, and also companies that are less hardware intensive. So companies perhaps more on the software end of the space market are more nimble, are able to adapt more. And connectivity, I think, is just part of the broader trend of all industries, really, with digitalization of economies. Satellites that focus on connectivity perhaps would do a bit better in this challenging environment, since the demand for data is only growing. But it's a complicated picture again. For instance, in-flight connectivity is a sector that many of these satellite operators are looking to for growth. And yet, if the pandemic flares up again, or if people are less keen to travel, that could impact what was going to be a big source of recovery for companies out there.
Yeah, that's an interesting dynamic, people's behavior, because sometimes it lags behind their thirst to get back to what they think was normal. But their behaviors have actually changed, and you see it result economically maybe a little bit further out. Just too quickly, Jason, before I let you go, do you have any data regarding the trends in M&A? I mean, you were suggesting perhaps more M&A now because of some of the conditions. Is there any data out there where you're looking and saying, we're seeing maybe 10% more? Than just making up that number, but.
I have specific figures like that. But from what I hear from analysts is they expect there to be an acceleration of a trend that's already been going on toward consolidation of complementary capabilities and vertical integration. So, a satellite operator climbing down the value chain to buy service providers to get closer to their end customers as a kind of a strategy to kind of clear a picture of what's coming up on the horizon, to be more nimble. That seems to be something that we see a lot of when the outlook is cloudy. And so a lot of analysts expect that to be a big driver of M&A this year, horizontal and vertical integration. Of course, we've already seen some satellite operators come together recently. But Viasat is close. Right. I mean, it's in the process of buying Inmarsat. There are questions whether that will go ahead. And we got Intelsat and OneWeb merging. Could SCS and Intelsat follow suit this year? That's something that's been rumored about for a while. So those kind of deals.
Okay. Yeah, I'm going to ask Will Porteous in particular, and Peter as well. Do we have too many satellites? Do we have too many satellite operators maybe? Is that one of the trends? Because we've heard that, but who knows? Just quickly on SPACs. Are they dying a slow death in an economy such as the one you're describing, or it's just always going to be room for them? Are they part of the financial infrastructure now? Do you have any data on?
There has been a noticeable downward trend in new SPAC mergers. I think was there two. I haven't got the figures off the top of my head, but last year was noticeable downward trend compared to the years before, and that's why Worldview was so surprising, that there is still some kind of appetite out there for these kind of deals. The not only do they have the economy working against them, there are stricter regulations coming into force to kind of cool off some of the frenzy of activity that we have seen recently. And I think it's not just space companies, it's across the board for this type of financial vehicle.
Yeah. Yeah. Well, Jason, I thank you for your reporting and for the significant digits reports, because it reminds me of the Buddhist concept of anicam, which is change and transition. It's always occurring, and our industry really reflects it. I was reading a piece from Deborah, your colleague Deborah Werner, from 2017, and she was talking about a swarm of tiny satellites which could relay messages by year's end. This company Swarm, and 4 years later, I think Swarm's CEO was the director of satellite engineering at SpaceX, which had acquired them. So things move pretty quickly and dynamically, as an example. So the biggest change you think we'll see when I ask you this question next year?
How do you mean biggest change in the industry?
Yeah,
I think the direct to smartphone trend we're seeing. A lot of companies are jumping on that bandwagon at the moment. That has the potential to give satellite companies this mass market that has been talked about for a long time. It's helping to make satellite communications less weird in the context of the broader terrestrial communications marketplace. So this time next year, perhaps, satellites will be seen even less as this kind of niche, weird technology. And also Starlink has helped pioneer that too, with their home broadband service, bringing that into more people's homes and bringing the coolness factor of SpaceX along with it, helping to change the perception of space for everyone, helping to raise the profile of the industry. Yeah. So perhaps we'll be seeing that more next year.
Okay. Well, again, we'll be asking Will and Peter what they think about that. But again, many thanks, and I'm glad things have gone well for you in space news, and we look forward to next month's report as well.
Pleasure. Thank you.
Thanks, Jason. Okay, that was Jason Rainbow, and I know Peter and Will were listening closely. So, what you do at the beginning of the year when you're, it's kind of like a celebration of the year. You bring in your legends, and Peter B. DeSelding is certainly one of them. He's delivered more than 20 years of incisive coverage of the commercial space and satellite industry as the Paris Bureau Chief of Space News before co-founding Space Intel Report and becoming chief editor. His reporting has broken many stories in the industry, and Peter, as we know, has never hesitated to tackle controversies, reveal conflicts of interest, and hold leaders accountable for their decisions. But he also has a big heart, and I'm here to tell you that. He was inducted into the Space and Satellite Industry Hall of Fame in 2021. He's widely considered the preeminent dean of reporters in the space industry, and I think even Will Porteous, his fellow guest, will agree that he's a must-read. So, Peter, welcome to the New York Space Business Roundtable.
Thanks, Lou. Nice to be here.
Great to have you. Another legend and a future Hall of Famer, I think I can say that comfortably, is Will Porteous. Will is the general partner with RRE Ventures and also serves as the firm's chief operating officer. During his 2-decade career as an investor, Will has served on the boards of more than 20 companies. He's been a leader in the transformation of many sectors, including geospatial, most notably as chairman of Black Sky and as lead director of Spire. He's also a director of Nanit, Paperless Post, Pattern, Pilot Fiber, Ursa Space, and Wave, and a former director of BuzzFeed. Wow, Will. Will is also the founder and chairman of the Dockery Farms Foundation from 2003 to 2018, and he served as an adjunct professor up at Columbia Business School here in New York, where he taught a very popular course on venture capital. And I believe Will holds his MBA from Harvard and also has a degree from the London School of Economics with honors from Stanford University. And we don't hold it against him that he doesn't have a degree from Notre Dame, but he'll probably get one of those at some point. Will Porteous, welcome to the New York Space Business Roundtable. Great to see you, my friend.
Thank you, Lou. Thanks for having me back.
Okay, guys, you just heard Jason Rainbow's report. What I want to ask you first, though, is sort of to take a sweep around the global economy. There have been elements that Jason referred to: inflation, supply chain interruptions, even a pulling away from globalization, the cost of money, some slowdown in investment. Obviously, now the United States Congress may do something that could create a vomit comet. As you look at that, Peter, do you see the continued progress in our industry going forward, or are things going to really upset the apple cart here? What's your take on how that will impact deal flow in the industry overall?
Okay, well, I know we're talking to a New York audience, but if I could just, if I beg your indulgence by expanding the word deal to include just business investment flow.
Yes.
Because a lot of what we're seeing now, particularly outside the United States, in Asia and in Europe, I'm in Europe, is governments really taking the space economy as vector for economic growth idea by the horns and investing massively in it. The number of governments who are spending hundreds of millions of dollars in their COVID recovery funds, they got loans from the European Union for this at low rates, and they're directing a lot of this into space enterprises, and some of them are fixing minimums for what, if not startups, at least young companies must get in terms of contract value from those monies. It's a remarkable thing, and it shows no sign of stopping. I admire Jason's. He's got more brass than I do, trying to put all this inside a lasso and come to some conclusion. I'm not sure what conclusion I could draw from it. There are still companies now finding funding for very risky stuff. All right, risky in the sense of they've got the chutzpah to want to do this thing that won't turn a profit for investors for years, if ever, and yet it's cool and it excites people. Worldview is not necessarily all that out there in terms of technology, and of course their SPAC is not a very large one, and I can only hope that they do better at predicting their first year revenues than their SPAC brothers and sisters of 2021. But it's really all over the place. Sure, there are failures, but I mean, the industry is big enough now, and Will can speak to this as well better than I can, is really bifurcated. What we used to talk about when we talk about space was large CapEx enterprises that had a lot of depreciation, and that was the model. And those that didn't have a lot of depreciation at least had long CapEx cycles, and they had to climb along, a steep CapEx hill to get where they were going. That's no longer the case. That just the numbers I've been looking at here over the last 6 months, most of the things we're talking about now, and thank God we're getting away from funding another 1,000 small launch vehicles, are downstream people. All right, this is software that's taken over the planet and taken over the space industry, and that's a good thing because they don't. How many people do you need in a dorm room to start a company now that can be called a space company? That was never true 5 years ago. So that's the good news, and that suggests that the economic environment that we're talking about obviously has macro effects, but it doesn't affect everybody all the time, everywhere. And so far as I can tell, aside from the fact the United States is not in recession yet, that bears repeating. Anything that you see in terms of a reduction of private sector involvement, and I'm not sure that's true either, or a pause, say, from the excesses of the SPAC period, and that wasn't just space SPAC, it was all SPACs, is more than matched by governments coming in with large amounts of capital and putting it at risk. These are pretty conservative governments who are doing pretty risky things.
Well, he kind of set the table for you.
He certainly did.
It's the downstream stuff. Yeah.
So I hate to interrupt the flow at the start here, but I have to give an acknowledgement that I'm a director of 2 public companies. And so what I say here today should not be construed in any way as a forward-looking statement related to Black Sky and Spire, where I serve as chairman and director, respectively. With that formality aside, I think Jason and Peter have captured a tremendous amount of what's going on. I think that we can look back at the recent period and see that a combination of private capital sources, public capital sources in the form of SPACs, and government sources poured an enormous amount of money into a new wave of innovation for the industry as a whole. And a lot of that innovation has now reached escape velocity in terms of becoming really good businesses. And that part of the innovation sort of collective that doesn't will still benefit the industry as a whole. And I actually think this is one of those periods where smart corporate development groups at legacy space and aerospace companies should be out there scavenging and picking up the great products that didn't turn into great businesses that can be really important future product line extensions for other things that they do. So we have this group of companies that have, I will say, reached a certain amount of escape velocity. And I think that even though we are facing a valuation downturn right now, as Peter just pointed out, we're still seeing meaningful flows of investment into the sector. And 2023, and I'll make the first prediction of the day, 2023 will be the year in which I think you see the operating leverage of the software-defined small sat architecture really start to show up in the numbers. And, we have this kind of dichotomy going on in the sector, whereas the underlying businesses are performing really well. And they're growing on the backs of incredible trends, some of which you highlighted at the outset, Lou. I think that not enough is being said in the US about the deglobalization phenomenon against this backdrop. As I look around, what I'm seeing now is governments around the world wake up to the fact that they can have direct access to their own or borrowed Earth observation assets in a way that they've never had it before. That's a direct byproduct of the change that's emerged with the small sat model and software-defined capabilities. At the same time, we're coming up on a real supply gap in the Earth imaging sector. The unfortunate failure of the Arianespace launch from Guyana at the end of the year took 2 expected Airbus satellites out of the future global supply base of imaging at a time when demand in this sector has never been greater. So I see us kind of moving to a place where we're going to be looking at the satellite businesses, both new and the old that have adopted this new model, and seeing, my gosh, it's a vastly better business than it ever was before. And for me, this is the big thing as an investor, because we're moving away from the extraordinary volatility associated with the CapEx cycles of the past. The big build is a thing of the past in the space industry. And for investors at every part of the capital structure, that is good news. Many of these companies can fund their future innovation out of operating cash flow. And we will see a much steadier, more predictable growth story and dollar of earnings coming out of this sector, I think, generally. The last thing I'll just offer as an observation, Lou, you mentioned inflation. Listen, we're in a rising interest rate environment. It's very hard to do deals, period. It's very hard to put a value on anything in a rising rate environment. And that's part of the reason that the Maxar deal and the 129% premium that Advent is paying is so remarkable. They clearly have a thesis that is many years into the future. So I think deal activity, however you define what a deal is, will remain relatively depressed until we see some stabilization on the interest rate side of things. And then growth companies need to come back into fashion, so to speak. And it's not, they won't get to us first. Let's put it that way, right? When the portfolio managers start to revisit their allocations to technology and growth and include space industrials in that sector, it's going to take them a while to get down the path to some of the innovators in our ecosystem. But
yeah, I want to ask both of you this question, but Will, maybe you can define the term a little bit. You referred to a certain, I believe, deglobalization in the character of the industry and the investment in it. And this is a question for both you guys. I'll stay with you for a second, Will. What does that actually do to, say, regional economies that may now have their own space industries, or Luxembourg, where you guys have investment in that future fund. Are we going to see sort of gross domestic local product get spiked and see a different kind of industry and deal flow evolve because there's less of a globalization in the industry? Is that how I should interpret that?
I think what we're seeing, what I'm seeing both in the space industry and in other sectors, is nation states wanting both their own owned and operated capability and wanting to be able to collaborate with their allies and get confirmatory data points through those relationships. And so there's an economic dimension to this, as the smart people in Luxembourg have recognized, and kind of building a future economic engine there that's built around the space industry. There is a defense and intelligence element to this. There is a supply chain element to this, and it's not a one or the other. It's not it's a both, as opposed to just a pure reliance on global partners. I also think you can't have this conversation without acknowledging that we have a new conflict zone in the east of Europe, and that has ramifications far beyond what's actually happening on the ground in Ukraine. People want to know what's going on at their borders, what could be going on at their borders, and I think they're looking for answers that global leaders, I think, are looking for answers in the West that go beyond just being member states of NATO.
Got it. We also have a conflict zone in our politics, right, where we're sort of backing down from the global regime that has largely persisted since 1946. Peter, over to you on that deglobalization issue as well. I mean, you're based in Paris. How are you looking at what Will was saying?
Well, I think Will's right. You can't walk down the street now these days in Europe without somebody mentioning the word sovereign and strategic and autonomy. A lot of that is because of a long-held resentment of the Google and Microsoft and Apple and Facebook. There's been some of that, and that people are reading across that to talk about a digital autonomy that they might be able to get by working against those big companies, especially as those big companies go into data centers and sometimes go into the space stuff as well. And the supply chain issues that came with COVID have accelerated this too. That might be an ephemeris that won't last all that long. But the status of China as a supplier for many people has to be put into question. And just in the space sector, Will mentioned Russia, and that's certainly true. There are many companies that were dependent on Russia for things that I didn't know about. And all of a sudden, when the tide goes out, you find who's been swimming naked, and you find out these people had vulnerabilities to Russian companies, which are now no longer people you want to be seen dealing with. So yeah, I think that's true. It's putting stresses on the European Union, which is 27 nations that are trying to get beyond that sort of stuff, and we'll see how that works. So far, I think it's working pretty well, but I agree that the globalization has taken a hit, whether it's permanent and deep or temporary and shallow. I don't know.
Yeah, Peter, I was listening to an interview that you did. I actually think it was for the Hall of Fame, and you'd mentioned that in reference to Russia. You said, I think it was, Russia doesn't export things very well, but they export space tech stuff pretty well. I mean, that was how you framed it. Getting back to what Will was saying about the impact of the conflict, of the war in Eastern Europe, what does the industry lose by Russia now not being part of the globe? I mean, the civilized world.
Well, from a European point of view, and it's temporary and was always due to be sunsetted, but the access to the most reliable vehicle in the history of rocketry, the Soyuz rocket, was a surprise. Happened from Western Europe's point of view 2 years too early, but nobody predicted February 24, 2022. So that was taken out from under their feet. It happened at a particularly bad time. But again, in 5 years, is that going to be looked at as a big deal? I'm not so sure it will, but for the moment, it's causing a lot of scrambling to go on. with some government payloads that cannot sit and wait until the next generation Ariane sorts itself out, and so they have to go elsewhere, SpaceX or MHI in Japan, or New Space India Ltd in India, for launch capacities. That's one thing, but there were satellite components as well that would still be made in Russia, because they're still low cost basis, and companies have now been forced to revert to a European supplier, and it's not been a huge deal. It hasn't slowed a whole lot of stuff down. It's just caused some changes to occur, and nobody wants to talk about it now. But the fact is that Russia is still, 15% of the Earth's landmass, and still on the border with Europe, and that's going to remain true no matter how this Ukrainian disaster ends for Russia. And it's, I don't know about you guys, but I can't even think to what that might mean, because I can't figure out how this whole Ukrainian thing ends. Every day seems to be something new to it. And but on the space side, it certainly has accelerated the trends toward strategic autonomy as a must-have for Europe. It's helped keep the European Commission together on certain under their defense and aerospace and space-related projects, and of course, it's done wonders for the to put a new lease on life on the NATO alliance.
Yeah. Will, you're nodding your head. I want to get off the Russia topic, but as you say, it's no pun intended, is the big bear in the room. And War and Peace is still on my mantelpiece here. I still read that, and it is still a great culture. So there will be an end to this. But Will, as just to conclude this part of the conversation, when you are thinking about investments, when you are thinking about running the businesses that you run, how heavy a weight does this conflict create for you? Is it a factor where you say every time we've got to factor in this variable in Eastern Europe, or do you say, hey, I've got a big enough crystal ball, I can look beyond it?
Well, Lou, I think frankly, in the recent period and in the short term, the conflict has been a real catalyst and an accelerant for a lot of new space companies, in the sense that they are now conflict proven in terms of their ability to deliver at a very high standard for global defense and intelligence customers. The war gave them that opportunity, and the war and Ukraine's particular situation in being outside of NATO, and so not having access, particularly in the early days of the war, to typical NATO-controlled assets, they had to turn elsewhere for the kind of Earth intelligence information that would allow them to understand how the conflict was unfolding. And that created an incredible moment for a lot of the innovative companies in this category. Everything I'm describing is in the public domain and in the public record. You can look at testimony on Capitol Hill to this effect. And so that, the conflict essentially gave these companies a tremendous opportunity, not only to prove themselves, but to prove what a modern architecture can do for customers in terms of response time, right? We're talking about high frequency imaging and AI applications that have radically accelerated the time to understanding what's changing at a border, movements within the context of the conflict, and that frankly have saved thousands of lives, we know. So it's actually been a boost in some respects. We all miss launching on Soyuz. Soyuz was great. We had a lot of notable companies get stuff to space via Soyuz. Yep. The long-term trend, though, I think, of people wanting access to their own capabilities, I think is also an overall positive byproduct here. So.
I mean, what I'm hearing through that is that innovation is maybe being spiked a little bit as well through all of this. So maybe we can come back to that if time allows. Peter, I just wanted to talk a little bit about who's doing well and who might have some advantages. You reported in Space Intel Report about the Iridium relationship with Qualcomm. You noted, and this was interesting, and this is typically you. You noted the difference between that at the Globalstar deal, it requires additional investment, which Apple seemed willing to take. But you said Iridium's constellation has made it effectively a good to go right to an Android phone. So among the many things that is intriguing here is the collaboration between these two over the past few years. But first, has Iridium set a standard for a type of collaboration on the commercial side? And is that company, headed more successfully toward the next phase of growth, sales, or acquisitions as a result?
Well, let me answer the easy part, which is the second part. I don't know about acquisitions on the part of Iridium, or whether they can sit and let a lot of struggling IoT startups just die on the vine, if that's what they think is going to happen, rather than taking the trouble to buy them. But certainly the company is now swimming in good news. But it has been for a while. It wasn't Globalstar. It was, when you pay $3 billion, you ought to get something for it. And Iridium got something for it. It was a constellation that, to my knowledge, there's been no insurance claims on it. It's got plenty of room for many millions of IoT subscribers. Iridium calls personal communicators now, but this is going to be going on to the Androids once Qualcomm adapts its Androids, sells its Snapdragon chip into new Android phones. I don't know if these are unusual circumstances here between T-Mobile and SpaceX, between Qualcomm and Iridium, between Apple and Globalstar, between AST Space Mobile and itself, which is going to require a lot more money. They don't need a partner, but they need money. And there are a couple of others, Link Global as well, that's going to need some money. So all this direct to device is a really fascinating thing. I remember 20 years or so ago, the head of a large satellite company in the United States said that Iridium represents the ultimate, because you can imagine anybody, anywhere having access to communications. And he said, I don't know if it's going to work, but if you're Iridium, you pay your $5 billion and you find out. And Iridium found out, first through bankruptcy and then through salvation by the US government. And now it's a very, very successful company with a second generation constellation. Right. And they're publicly traded. Everybody can look at Iridium at their own leisure. But whether that's going to be true for everybody else going into this, I don't know. One of the great surprise, not surprise.
Well, they won't have that history, Peter, right?
No, they won't have that history. But
no.
One of the companies that I find too many panels don't like to talk about is AST Space Mobile. They're publicly traded. They need a lot of money to go beyond what they raised in their SPAC-enabled IPO. But this is a company that's promised to do something really magic. Now, the magic is two-edged, just like most Disney stories. The magician sometimes does bad things as well as good. Or maybe I'm thinking of Sorcerer's Apprentice, because Space Mobile might be delivering the ultimate serious 4G and 5G speeds to an unmodified handset. That's what they're promising. Now, the flip side of that is they're also promising to launch a couple of nigh on 200 very large antennas into a 700 kilometer orbit, which to some minds look like debris fly traps. Whether those two things can somehow be married so that nobody goes away with 6 trillion pieces of debris at 700 kilometers, not a good place to have debris. But till we don't do without this promise, I don't know. I guess the first thing that's going to happen, we'll see what happens with the experimental satellite. That's not a small piece of change on its own, with a 64 square meter antenna. Once that starts delivering some of the initial service, but really, it's an amazing thing what they're doing. And it's an example of what this industry sometimes does. 15 years ago, Elon Musk was saying, you guys care so much about launches. Launches shouldn't be really news.
Yeah,
it's just stuff that happens. And 15 years later, he was right. He's right. Nobody can keep up with all the SpaceX launches now. They're more than once a week. Are you going to really start counting Starlinks? I mean, I know, thank God there are some people doing that, but I can't. So the Iridium deal with Qualcomm, they went upstream. So they're not wedded to a given maker. I think it was a smart thing. I think they've got other plans well beyond smartphones for that. How big the market is, I don't know. I'm sure Will has his own ideas. You've seen some fabulous figures being tossed out about how much money this might generate. I'm not so sure that's true. I'm not sure how often people spend in areas beyond terrestrial coverage where they really want to have broadband links, but I could be wrong. I don't know. So I wouldn't generalize from that. I do know, and I think Jason mentioned as well, that satellite to device is something where we're going to see in a fairly short term where that might go.
Right. Right.
Sorry, if I could just add one
Please.
question, ask one question to Will. I can't help myself here.
Sure.
So you were talking about how the war.
This was not rehearsed. Well, this is
No,
Peter.
we do
That's
best
fine.
on a,
We do this too. Yeah.
best on the fly. So Will, you were talking about how the lessons learned by people deploying hardware and services in a war environment. And one thing I want to ask you is, I've always been perplexed by this component of ESG, which basically says if you're investing in a military system, and there's an awful lot of space systems which walk a very fine line between the two, it's dual use in excelsis Deo, right? And you have to wonder whether almost a year after February 24, those same nice people who are in charge of multiple billions of dollars in investment funds, the last figure I read was somewhere around 100 billion or so, might want to reconsider. The CEO of Airbus was asked about this a couple of days ago, and he said he's seen very little evidence that any of these people, these funds who don't want to get into Airbus, because it's not just civilian aircraft or satellites, it's also military hardware. Very little evidence he's seen that these funds have changed their criteria for investment to, let's say, widen the aperture to accept the fact that not every military investment means you're investing in a CIA black site. Have you seen any movement there?
I'm seeing some movement, Peter, and I think we will see more movement in the coming years. But I think this is a gradual trend more than it is a radical pivot, if you will. The dual use is exactly the right phrase. Dual use in excelsis Deo. We're mapping deforestation one day, and we're tracking gorillas in the forest the next day. So it's a certain amount of a better understanding of the planet. These are the platforms that will deliver it. And we are seeing tremendous take up of all the kind of capabilities that we're talking about here today in applications that have nothing to do with conflict, the weather stuff being the most obvious one. And we've seen tremendous acceleration in the onboarding of new weather related insights from the next generation companies. So I think for our companies, being an ESG eligible company, so to speak, is really important because it represents a way to unlock capital that can build satellites, that can deliver insights, that can help lots of missions. I'm not seeing, I think the investment management community, and I'm really speaking of the public investment management community, particularly those with a mandate from the constituencies they serve to achieve certain ESG goals. I think that community has a problem on its hands in narrowing the spec, if you will, in terms of what's compliant and what is compliant. And selfishly and for the good of the whole sector, I hope that they can look increasingly at what the space industry is doing and saying, this is an industry that can help us unlock a lot of ESG value faster than anything else. So
I was going to say, for the good of Ukrainian people as well, that some heavy duty muscle, not dual use, but some heavy duty firepower, tonnage airlifted over to Ukraine, which is going on right now, as we all know, is not necessarily detrimental to the national interest, and it shouldn't make you sleep less well at night.
No, and I'll give you a case study that's even closer to home on this. So Ursa provides, the SAR analytics company, provides data to both the Somali and the Egyptian government on flows in a major reservoir, which basically is the water supply for a couple of million people. And you have standing armies on both sides who have a point of whose leadership has a point of view on what's going on around that water resource. And they've essentially created a space-based data a shared platform for understanding what's actually happening to the water supply, so that the two sides don't come to conflict over some misunderstanding. It's not to say it's going to prevent a war, but there's a very firm grounding. There've been a lot of non-NGOs on the scene to helping to kind of create this understanding. That's our industry, basically operating at both levels of this question.
Yeah, and that's the classic better satellite world, right? And hopefully keeping that situation stable through the use of real information. Well, I can't let you, I know we've got some questions, Tamara. I want to ask Will, though, quickly, because I think Peter referred to it. Link Global just launched, I think, cell towers in space. Satellites are covered by, I think what they claim is the world's only commercial space direct-to-standard phone license from the FCC, at least. The company's been innovating like crazy, including a new deployer system, et cetera, et cetera. If you want to talk a little bit about Link, you're welcome to. But my question is, how representative is it of the new satellite and phone marriage, which again could spawn a lot of other Gloria in excelsis Deus?
Well, so I think this really picks up on something Peter was saying earlier. You know, the phone to space connectivity activity is underway. Link is a good example of it, but it's happening across the industry. And frankly, as an investor, I think it's important for us to view this as evolutionary and not revolutionary. What do I mean by that? This is the space-based hardware layer that's been just 400 to 700 kilometers away from us for a long time. And having protocols that work well over those distances is basically unlocking a very clean metal layer that we can work with to build a tremendous layer of connectivity. And that's an abstraction that has nothing to do with the names of companies, nothing to do with their market caps, nothing to do with how much revenue they have. This trend is afoot, and there's a lot of players acting on it. Secondly, what's a cell phone? So many devices have an RF chip in them in the world, automobiles, there's the whole IoT sector, there's everything to be done there. And, it's obviously strategically hugely important that we're talking about players like Qualcomm who are embedding their version of RF in that entire layer. We are investors here at RRE in Link. We were one of their seed investors. Link does have a commercial license from the FCC and a belief that we have a pathway to more as we expand our operational constellation. Link today is testing in 17 countries. We're testing thousands of handsets. We have 21 commercial contracts with global MNOs. And so on the regulatory dimension, on the operational dimension, and on the commercial dimension, a lot of things have happened for them. And I think it's really a reflection of this trend overall. I ask myself the same question that you posed earlier. How many of these multi-thousand satellite constellations are there going to be?
Yeah.
And frankly, I think over the long run, there's a fascinating global antitrust question in terms of how that all evolves. Because in the background, what's really happening is we're bringing open architectures to this. We're bringing multi-protocol devices to this. And so the silos are breaking down. And you're going to have constellations that support a lot of different first datacom activity and then eventually other lower latency applications. That's the world that I think we are inevitably headed from, taken there by players big and small.
Yeah, I think that's well said.
I know just one, if I could just
please, Peter. And then we've got a question.
I know we got. Yep. I'm going off script again. Sorry.
No, that's okay.
Just 2 points. One of the debates that has not been resolved, at least in my mind, if it has in yours, well, please educate me, is this is breaking down into two sorts of, I'm talking about satellite to device here, two sorts of ways of going about it. One is using mobile satellite spectrum and sticking that stuff into devices, either directly through a company like Apple or via a chip provider like Qualcomm. And the other one says, no, I can use the existing terrestrial spectrum licensed by my mobile network operator partner in country X, Y, and Z. And that's the way to go about it. And I'm wondering whether that question is not going to be answered not by customers, but by regulators. You get regulators on either side of the issue. I just want to make sure everybody knows that behind a lot of stuff we're talking about here are regulators. And Will says, breaking down barriers and all that stuff. Regulators hear that sort of language and it makes them afraid.
Well, and with good reason, because there's real asset value and real property rights at stake here. And when you think about let's think for a second about sovereign interests in a national network operator that owns a bunch of spectrum, that has a bunch of terrestrial sunk cost in their base station environment, right? So suddenly there's a lower cost of capital space-based alternative. Sovereign nation has an incentive to not to see that legacy company in their country go away. And so my sense is that regulators are going to act in the interest of what's best for the nation in that conversation, even if it's, let's take this terrestrial mobile spectrum and give this player a seat at the table in the new space game. So I think that potential chain of events, Peter, portends a lot of back and forth on spectrum, frankly, some massive spectrum deals in the future as this gets sorted out. I don't think it's been sorted out at all. I think you're pointing us towards a very important future source of conflict and value exchange.
Yeah. Ultimately, though, Will, behind all that is economic development, right? And foreign direct investment. This is all being done to support the regional economy and again, or local economy. And again, to the extent that you have deglobalization, does that? Well, we got a minute left here, but does that impact the ability for global bodies to regulate things for the general welfare? That's sort of an open question, but
yeah, I think it is an open question, and it's going to come. It's a question of authority and interoperability, and the kind of the value exchange that has gone on around spectrum topics for a long time.
Yeah, I've really got a concern about our industry being a global industry now. In the winds of these political movements that are, as you say, making it less global. I'm wondering about the levels of cooperation going forward, but that's probably a whole other show. Tamara, I'm sorry, I'm taking us over time, and I know there's a bunch of questions out there now. Do we have time for one now? We don't expect you to ask questions as good as Peter, but we know you've got questions asked there. Tamara, what do we have?
Yeah. Well, I do have a bunch of questions here. I'm going to go ahead and we're at the 102 mark. So I'm going to set the recording, set the settings so that people can come on camera and unmute themselves if they wish to. And I want to start with, before I do that, I want to ask questions of someone who actually had to leave early, but he threw this question out there. He says, I think a successful launch of Starship, he's answering the big question, will be the biggest step change for the space and satellite industry. It removes a lot of constraints and opens up whole new opportunities. So I'm going to throw that out to you guys. And there's a question from Anthony. Anthony is still here. Anthony, do you want to come on camera and ask your question real quick?
Yeah, absolutely. Hi, everyone.
Hey.
Hi, Lou. Hi, Peter. Hi, Will. Thank you, Tamara.
Anthony.
So I have essentially two questions. Let me go to the first one. And I wanted to know how companies, i.e. VCs, et cetera, value startups, particularly in this industry. My background is in finance, and I just want to know what nuances there are within this industry. And should I ask my second question or just wait until this one's
really
done?
Fast, and because we have to get
right.
Why don't you let's answer the first one first, and we'll throw it to Will, and then we'll hear your second question.
Absolutely.
The core competence of every finance leader in the space industry is the ability to raise money. It's that simple.
Peter, do you have any general disagreement with that?
No.
Okay. Anthony, what's your second question?
And Anthony, I'd be happy to have an offline conversation with you that's much more nuanced, but that is the superpower that
Okay,
people need.
So,
fair enough. So that's just that sounds like standard fare, the ability to raise and whatnot. Okay, I appreciate
And
that.
really raise money. I mean, I know so many CEOs in the space industry looking for CFOs who can help bring big dollars to the table. Because all it takes in this industry is money.
So funny that you say that, because as I mentioned in the chat, I'm eager to get into this industry. So the next good question would be, who is hiring?
Well, what you can do there is communicate offline with Tamara Bond-Williams.
Absolutely. Okay.
Because at SSPI, we're all about getting people into the industry, finding opportunities for them. So we'll certainly take care of you there. So Tamara, why don't you and Anthony exchange notes?
And then I will send you a message, I suppose, on LinkedIn, or I'll email you.
I'm easy to get to.
Oh, fantastic. Thank you. Thank you.
Thanks, Will. Thank you, Anthony. You have another one, Tamara, then?
Yeah. Sen, are you here still? And would you like to come on camera and ask a question?
Yeah, sure. Hey, thanks for taking my question. I wanted to ask in the back, in the context of what was said about interest rates before, and cost of capital and focus on a growth investment. What is the, I guess, venture capital industry's view toward like space tourism and commercial space stations investing, or what would you like to see or would need to see to invest in those businesses? Thank you.
Sure. I think so. First of all, just to break it down for a second, I mean, the view on the role of interest rates and in suppressing investment activity and deal activity really is, you can go right to kind of the calculation of the discount rate in your models, and you're taking more and more of the value off the table in terms of what future cash flows represent. So that's the actual math, which not enough people, in my experience, stop to explain. The view towards I have been pitched space station deals, and I have been pitched space tourism deals, and I don't have enough of a bottoms up view on the real demand and the real dollars available today to grow those businesses. And so I think there's a lot of risk of you build it and they will come. And frankly, for the investment firm that I'm a partner at, for the amount of capital that we invest, it's important not to get into things that are too wildly capital intensive or too long term. And so that's why we haven't pursued those areas further, but other investors have. In the space industry, I'll just close by saying the space industry has always, I think, largely benefited from the vision of people, ultra high net worth people who want to fund a transformational future. And I think that we have seen in the recent period, a lot of those people do things that take this industry forward, including in the sectors that you're talking about. And that's no surprise. Their predecessors were doing that in aviation 50, 70 years ago.
Peter, just to pick up on that, you talked earlier about the chutzpah that is really at the heart of this industry in terms of its entrepreneurs and its innovators. You've talked a lot about leadership, and you've interviewed all the leaders in the industry. Is there anything that sort of separates out the chutzpah and the innovation from, the man or woman who really just moves it to that next level that Will's describing, aside from the fact that he or she can raise money? Are there any other sort of the qualities that you've observed that you can share?
Yeah, the fact that I'm having difficulty answering the question doesn't mean it's not a good question. It's just that there's lots of edge industries that require the same sort of thing in leaders. One thing that I've seen in this industry, and I think will not contradict me, is that as in all industries, but especially in this one, there's a real big difference between being the match that starts the fire and being the firekeeper. You can't have a firekeeper without somebody lighting the match. But a lot of match lighters should get out of the way and often don't know how to do so because their skills are elsewhere. They're the straws that stir the drink, not the people who serve the cocktails and maintain the bar.
Right. And that's a great answer, actually. And it does probably come down to being able to understand your own weaknesses and to hire the managers who can execute for you. Gosh, we're running out of time. Before I ask Will and Peter the big question, Ori, let's take everybody through what's coming up next at SSPI. As you can see on your screens, next month we're going to be talking about where cryptocurrencies fit into space financing. That's on February 15th. And then as we go into March, we'll be talking about Luxembourg. Is it the best investment in commercial space history? And Will alluded to it a little bit today. So that's what's coming up next in our Deal Flow in Commercial Space series. Okay, we've got Bridging the Broadband Gap, a new series of podcasts and videos as part of our Better Satellite World campaign, underwritten by Hughes. So stay tuned for those. That series launched on the 23rd, and we've got podcasts with Hughes and Helisat and Isotropic Networks coming up, as well as some terrific videos, again, that will look at this issue, which I know is very near and dear, Peter, to your heart as well, universal internet and broadband connectivity. What else we got going? Okay, on January 26th, our SSPI WISE organization is having a closed meeting. Women of the industry, of course, are all invited. And if you don't know about WISE, you should learn about it. It's our fastest growing special interest group. And Tamara, it looks like there's an open meeting on February 23rd, which is open to all women. That is correct?
Correct. And also all men and also all everybody.
Oh, okay. So all everybody, calling all hands. Okay, so that's you've got the dates on those. And we encourage you to continue to look at our Space Business Qualified course, which we've produced in association with the Global VSAT Forum and SatProf. If you're a human resources officer, if you've got a startup company and your employees want to or need to learn the business of space, this gives it to them in a terrific and very, very accessible online course. And there's a certification program that goes along with that. So as this industry matures, this product has really taken off for us. And we encourage you to go online at spacebq.org and learn more about it. You can actually take a free course. And also listen to our podcasts on Apple and Spotify. We're back. We were in London in December with the Better Satellite World Awards dinner, and we will be back again next December, this coming December, I should say, December 4th, over in the UK. And that is just an event that is so festive and so inspiring that we're so happy that we've hopefully got COVID on the run and we can continue to do that. And you can register now, actually, and plan your trip to London in early December. So we look forward to seeing you at the Better Satellite World Awards dinner in the UK. Okay, the big question. And guys, you can answer this, in a couple of different ways, but we want to just quickly take a look, Peter, at what you think either the three biggest deals this year will be for the industry, or maybe the one or two biggest trends that you think you'll be reporting on at Space Intel Report.
And before we interrupt, before we answer the question,
yes,
I'm just giving us a heads up that we have 2 minutes, so we can answer these questions super fast.
That's Tamara saying we need to exercise the 2-minute drill. Peter?
Okay, I will leave Will more than half left, I hope. So the two big things that everybody's watching and that are not amenable to U.S. Pushing, at least not much, except on the military provision side in the case of the Russia invasion of Ukraine. And the other one is the evolution of the Chinese economy, about which we should learn a lot more in 2023 than we know now. Those are things that could be very, very bad. I hate to go on the negative side, but as Will said before, the negative stuff for the wider world is not necessarily negative for all sectors of the economy and all companies. And the second one is, and Lou, I'm sorry for keeping a dead horse alive just so I could beat it, but this 2023 may or may not be a year when something tips over and people understand just exactly how much of a threat future collisions and debris accumulation in low Earth orbit has become. Lots of differing opinion. I'm not prescribing anything. I'm just saying the more you look at it and the more you realize the inevitability of a certain number of constellations that we know are going to be built, the market is not going to solve our problem for us now, at least not before the constellations are in orbit. That is a big deal that could put this whole show out of business right quick.
Oh, okay.
Oh, okay.
Oh, okay. Great.
That's a whole show right there, Peter. But if you're
Okay,
in
so
space
you're aware of it.
debris business,
Okay.
Will, let's go to you. Last word. What have been
So
the three
I'll
biggest
keep it
deals?
brief. And again, nothing that I'm about to say is in any way a forward-looking statement. There's two basic themes to think about for these companies in the present environment. Increased differentiation. The strong companies will get stronger. The weak companies will struggle. And the strength of execution, quality of business model, quality of product capability, all of that will shine through much more clearly in 2023. And differentiation of the sort I'm talking about is a precursor to consolidation of all kinds. People like to talk about consolidation as companies merging, but it's much, much broader than that. We see a lot of demand for consolidation of capabilities, data sets that you didn't used to get from the satellite industry, now suddenly being alongside other important data sets. Yes, company consolidation, but also team and capability consolidation. As in every cycle, this era will birth a couple of new important long-term independent companies. And I think you'll start to see the shapes of that much more clearly in the next 12 months.
Very good. And what will that company be? Will it be a data-centric company? Will it be a launch company? Will it sell ice cream in space like Celestis, bury people in space? What?
We might be inviting them next month to answer exactly that question.
Okay, she's cutting me off. Will, Peter, thank you so much for making the time. You guys are always just fascinating, and we really appreciate it. And I also want to thank the audience for being so loyal and showing up every month for this roundtable. Tamara, thank you for being the glue that puts all of this together. Very much appreciate it. Ari, behind the scenes, thank you for making sure everything worked. I will show up next time for the rehearsal, I promise. We want to thank the Luxembourg Trade and Investment Office here in New York for their support, as well as World Teleport Association and our media partners at Space News. On behalf of Space and Satellite Professionals International, I'm Lou Zaccarella, reminding you that it's time to go out and make it a better satellite world. Happy New Year, everyone. We'll see you next month.
See everybody in February. Thank you so much.
Yeah.